Hi, everyone. Larry Bailey here with Mortgage Workflow Partners, bringing you another weekly market update. Today is December 9th, 2024. We're going to go back to the week of December 2nd and talk about everything that happened. My voice is kind of back. I'm sorry for how it sounded last week, but we can't always control how healthy we stay, but we can control the information that we know, and that includes mastering Encompass. So listen, if you're using the Encompass platform, I know especially if you've been using it for a while, I know you feel like you know what you're doing, but there are so many parts of Encompass that you probably don't even know that you could be leveraging today, right now, to make your workflow and your company better. Especially with the 24.3 update that just came out over this weekend, there is over 300 pages of release notes between all of the important parts of Encompass that you probably want to know about, and Mastering Encompass can actually help you with that. So head over to masterencompass.com. We've got admin cohorts starting in January, user cohorts starting in January. Very affordable ways for you to make sure that you know exactly what's going on. Go check it out there. All right, let's get over into this week's information review from last week. Again, this is covering December 2nd. We're going to go into a lot of these stories here. So despite strong headline job gains reported in November, there are signs for underlying weakness in the labor sector. Meanwhile, home prices continue to appreciate on an annualized basis. Here goes into these stories. The first one is strong headline jobs report, but underlying weakness, like we just said. The next one is private sector job growth below forecasts. Pay gains accelerate. Super nice. The next story is deeper look at uptick in October's job openings. We're going to get into the next story of low fire, low hire trend lingers. The next story is annual home prices growth continues. The next story is the family hack of the week, if you're interested in that. And then we'll get into finishing this up with what to look for this week. All right, here we go into the first story. This is the strong headline jobs report, but there's underlying weakness. So it's really important to understand this information that comes out. You can see the graphic on here. We're almost at a flat line when it comes to monthly unemployment rate. But you do see these up and down for monthly job changes in U.S. employment. All right, so here's what's going on. The Bureau of Labor Statistics, that's the BLS, they reported there were 227,000 jobs created in November, which was slightly above estimates of 214,000. Although many of these were bounce back jobs from storms and strikes in October. Remember, we had a lot of stuff going on in October. It's hard to remember because it's December, but we had the hurricanes and we had the huge United Auto Workers strike. And so all that stuff is behind us. We had the Boeing strike as well. All that stuff is behind us. And we did have some positive revisions to the September and October, where the report was added 56,000 jobs to those months combined. The unemployment rate rose from 4.1 to 4.2%. So when you're talking about this story, the bottom line is while headline job numbers and revisions showed growth and showed strength, there were underlying weaknesses within the data. This is especially evident when comparing the two surveys within a jobs report. Remember, there's always two surveys. They told different stories. So the headline jobs number, that's the 227,000 positive. That came from the report's Bureau survey, which is based predominantly on modeling and estimations. However, the household survey, that's where they actually pick up the phone and they call you and they're like, hey, do you have a job? That actually showed 355,000 job losses, which followed 368,000 job losses in the previous report. So there's clearly a big divergence between the household survey and the business estimates. And as this gap over the last 2 months alone is 1 million jobs, which is just wild. So the household survey also showed that we lost 111,000 full-time jobs and 268,000 part-time jobs last month. Plus, the only age group that saw job gains was the 16 to 19-year-olds, which is probably seasonal hires, let's be honest. Meanwhile, the average duration of unemployment rose to 23.7 weeks, the highest amount since April 2022. All right, let's get into this next story. Private sector job growth below forecasts as pay gains accelerate. And it's always nice to see pay gains accelerating, but we also want to see job growth. So it kind of goes hand in hand here. You see a nice little graph on screen from ADP employment report that shows the month over month, how we were down, we came up, and now we're kind of going back down, at least for November. November's private sector job growth was weaker than economists had forecasted per the ADP's employment report, which showed that employers added 146,000 new jobs versus the 160,000 that were expected. October's report was also revised lower from 233,000 job creations to 184,000, subtracting 49,000 jobs from the previous report. Bottom line in this story here is large businesses defined as 500 or more employees, that accounted for the bulk of hiring last month as they added 120,000 new jobs out of that 146,000. So while small businesses, which are fewer or equal to 50 employees, continue to struggle, shedding 17,000 jobs. ADP also noted that performance among sectors was mixed, with manufacturing losing jobs and financial services and leisure/hospitality showing signs of softness. However, it's important to note that the trend line in wage growth did reverse course, with annual pay gains growing for both job stayers, rising 4.8% from 4.7%, the first year-over-year increase, by the way, in 25 months. And job changers saw up 7.2% from up 6.7%. This could be influenced, of course, by seasonal hires, as companies have offered more incentives to workers ahead of the busy holiday shopping season. So it'll be something to monitor moving forward in upcoming reports. All right. Next story is deeper look at uptick in October's jobs openings. So the latest job opening and labor turnover survey, that's the JOLTS report, that showed that job openings rose from a downwardly revised of 7.37 million in September to 7.74 million in October. So it's a pretty big jump, which was what economists had forecasted. The hiring rate fell to 3.3%, which is the lowest level since 2013, excluding COVID. The quit rate increased from 1.9% to 2.1%, bouncing slightly higher than the lowest level since 2015, again, excluding COVID. So what's good to understand about this story is while the increase in job openings were unexpected and above estimates, the total may be weaker than the data implies, as the rise in remote work has led to job listings being posted in multiple states more frequently. Plus, a low quit rate also suggests there's less poaching from other companies and fewer people feel confident about finding new employment. In addition to that, the job openings and unemployment ratio, which compares the number of job openings to the number of unemployed persons, is at 1.1. This big decline from the peak of 2 in 2022 and shows a labor market that is cooling. So basically, how many job openings are there to unemployment people? We're now almost at parity. So the labor market's cooling. That's what the data really shows. All right, this next story is low hire trend lingers. The initial jobless claims rose 9,000 in the latest week, with 224,000 people filing for unemployment benefits for the very first time. However, continuing claims fell by 25,000, as 1.871 million people are still receiving benefits after filing their initial claim. Despite the most recent decline, continuing claims remain elevated, now topping 1.8 million for the 26th week in a row. It doesn't say it here, but I'm really happy that it's no longer at 1.9 million. Why is that a big deal? Again, 1.8 million for 26 weeks in a row, it just means that people are having a really hard time finding new employment. This goes on where the low hire trend, it still remains persistent because employers continue to hold on to their workers while slowing down their pace of hiring. There's also referenced in the latest job cuts report from Challenger Gray and Christmas, which showed that hiring announcements fell to the lowest level year to date since 2015. All right, so let's get to the next story, which is the annual home price growth continues. CoreLogic's home price index showed that home prices nationwide rose 0.02% in October, which was stronger than forecasted, which doesn't sound like a lot, but it's still stronger. Prices were also 3.4% higher when compared to October of last year. CoreLogic forecasts that home prices will fall 0.03% in November and rise 2.4% in the year going forward, though remember, their forecasts tend to be conservative. Bottom line in the story, of course, is that CoreLogic's appreciation data has been weaker than Case-Shiller's, which is, by the way, considered to be the gold standard in tracking changes in residential real estate values. For example, Case-Shiller's latest report showed that home values nationwide rose 3.9% higher in September than a year earlier, while the Federal Housing Finance Agency also reported 4.4% annual growth over that same period. In addition, the fall usually brings less competition in the housing market, mostly because families with school-age children like to be settled ahead of a new school year. While this season is typically the softest for home price growth, these reports show that appreciation remains healthy overall. All right, gang, family hack of the week. Here we go. We've got, if it's not cold in your area of the country, congratulations. Cold is relative, of course. But if you're interested in some hot cocoa recipe, this is courtesy of All Recipes. Head to this spot in the audio recording if you're listening to podcast. If you're watching on video, you'll see on screen the recipe. Check it out. Let us know how you do. Here's what we're looking for this week. We've got the Fed watching crucial inflation data when the CPI, Consumer Price Index for November, is reported on Wednesday. The Producer Price Index, which measures the wholesale inflation, that follows on Thursday, along with the latest jobless claims also on Thursday. We'll be watching here to see what's going on. The U.S. 10-year Treasury is still higher. It's around 4.1896% right now for a yield. And the mortgage-backed security for the 30-year 6% coupon is trading at 101.43. It was previously, we were using benchmarking 5.5%, but it seems, it just seems ridiculous to think we're going to keep on tracking that 5.5. So the trend line did move to the using the 6% coupon. It's still worse by 12 basis points right now, which means money is more expensive. So like I always say, if you get a deal and you can afford the deal, take the deal, because money gets more expensive far faster than it gets cheaper. That's what my 30 plus years of mortgage lending has taught me. Take the deal that you have. You can always come back if you need to, but it can always get worse if you don't take it. So that's my advice to you today. Secondary advice, head over to masterencompass.com if you want to learn all about how to use your Encompass platform in ways that you never knew were possible, more efficiently and more solidly, more fulfillment out of that Encompass platform that you invest so much of your time and money into. And we always meet with us every Tuesday at 4 p.m. Eastern for our community meeting. And we'll catch you there. Thanks, everybody. Take care.